So you use some retirement planning software tools, perhaps one of the ones we talk about on this show. You enter all your information and it gives you your chance of success. Or maybe you do the same thing with a financial advisor and they have their own software that they use. Either way, you have this chance of success, this number, 90%, 80%, whatever it might be. This is your chance of not running out of money in retirement is effectively what it is. And I've often wondered, how reliable is that number? I mean, we don't really know how most of these applications calculate it. We know it's Monte Carlo simulations. We can certainly understand that at a high level, but we don't know the actual calculations that are going on within each of these retirement planning apps. And so it got me to thinking, if I put the exact same plan into 3 or 4 different retirement planners, will I get, more or less the same chance of success? Well, that's what we're going to find out in today's video. I will tell you the results raise more questions for me than they answer. I want to just give you a heads up to that right now. I do have a plan for dealing with it, but I want to show you the results. Now, we're going to look at Pralana, Boldin, which used to be called New Retirement, ProjectionLab. We're going to take a quick look at Right Capital as well, and we're going to run it through a couple of different scenarios. So let's get started. I will tell you that when I first did this, and by the way, ignore this 99% chance of success at the moment. When I first ran these numbers, the results concerned me, in part because they were so different, and it made me wonder, are the plans that I've entered the same in each of these different retirement programs? And you might think, well, Rob, how hard can that be? It turns out it's incredibly difficult, because each plan deals with investment accounts, returns, how you enter expenses very differently. And so it actually took a lot of work to get the plans that I think are apples to apple comparison. So what I did to begin with, kept it very simple. First of all, I started with no expenses. Actually, I think I've got, $1 a month, but effectively I started with no expenses. I just wanted to look at the asset size. It's a single person, they're 65, they've retired, so we're not even dealing with working years at this point. The plan has them living until 95, so a 30-year retirement. And for accounts, again, I've got some placeholders here with just $1 in them, but to start with, a $1 million Roth IRA. And one of the reasons I picked a Roth to begin with is don't have to worry about taxes, don't have to worry about required minimum distributions. We will add those in just a minute, but all I wanted to know was, if we've got a $1 million Roth IRA and we put them into 3 or 4 programs, do they all show the same balance after 30 years, assuming the same rate of inflation and the same return rate? I used 8%. Turns out that wasn't, you think that would be easy. It turns out it wasn't. Let me show you. So in Boldin, we can go to projected net worth, and we can see that at the end of this period, now I'm looking at future dollars. We could have looked at this in today's dollars as well, but I just chose future dollars. You can see we've got about 10.1 million. That's so $1 million today. There's no taxes, there's no required minimum distributions. It earns 8%. 30 years from now, it's we'll call it 10.1 million. But we go to Pralana, it's 10.8. It's got about $700,000 more. Is that an issue? Maybe they calculate compounding a little differently. I wasn't sure. Then I did this with ProjectionLab, and it was closer to Boldin, $10,060,000. Still different, but close. It seemed like Pralana was the outlier. Now, I will tell you, this kind of discrepancy happened a lot, and I had to hunt down the reasons that this was happening in each of the programs as best as I could. In Pralana, it turned out it was kind of somewhat easy to figure out. It turns out that when you set up a plan in Pralana, I've got the plan year starting this year, right? Because we're in December of 2024. Well, what Pralana does is whatever plan year you start with, it goes all the way back to January 1st. ProjectionLab and Boldin do not. They recognize that we're in December, and so for 2024, they're only going to show compounding for the remaining few weeks in 2024. So what I had to do with Pralana to get it close is to actually start the plan year at 2025. It loses a few weeks here in December. If we go back to the balance sheet, it brings right down to 10 million. So we're at least close enough. 10 million for Pralana, 10,060,000 for ProjectionLab, about 10.1 million for Boldin. And so, believe it or not, that took me a long time just to get the asset right. And we're only talking about a Roth yet. We haven't even gotten to one that gets taxed. So with that, I decided, okay, let's add some expenses. So what I decided to do, I've zeroed out all other expenses. So there's no Social Security for income, there's no Medicare, there's no long-term care insurance, and all of the expenses that we're going to add to any of these plans just come in the general expense category. And we're going to do $4,000 a month, which comes out to what, $48,000 a year. So that would be an initial withdrawal rate of 4.8%. And if we look at Boldin, we get an immediate chance of success. It's very quick here, 60%. Okay, we got that number. So in Pralana, to do this, I use miscellaneous expenses. Don't think it matters. And so this is annual, not monthly. And that may be relevant, as you'll see in just a minute. But so we'll put 48,000. We do want to adjust it for inflation. We'll go to the Monte Carlo analysis. This was something I ran earlier, but we'll run this again. It takes a second. And in ProjectionLab, here are the expenses for this plan. We'll come here, 4,000. Now, with ProjectionLab, you can do it monthly or quarterly or even daily, I guess. But we'll just do monthly, and we'll save that. And then we'll come over to chance of success, and it's running. So remember, Boldin was 60%. ProjectionLab is 93%. That's a big difference. That's a problem. Now, with ProjectionLab, you do have different settings. I am using their normal distribution. I don't believe I've changed their mean or standard deviation, something that you cannot do in Boldin. You can change the mean, that's just the return that you're using. You can't control the standard deviation in Boldin, but I didn't change these, and it's 93%. Well, what about Pralana? 83. Well, this is not helpful. So basically, we have 60% chance of success for Boldin, 83% for Pralana, and 93, it also was 94% earlier when I ran it for ProjectionLab. So that's very concerning. And if you ask me, okay, Rob, well, that's great. Which one's right? I have no earthly idea. We'll come back to that question because it's an important one. Now, I mentioned Right Capital. With Right Capital, I got 78%. So it's just it's a fourth option. Remember, Boldin was 60. Pralana was the next one up, 83. So we've got Right Capital in the middle. Now, one thing about Right Capital that I'll point out is that it uses asset classes. You can put in your asset classes for your investments, and then it determines the rate of return and the standard deviation. If you work with an advisor that uses Right Capital, the advisor can change those assumptions. But as far as I know, the end user, like you and me, and most of you probably don't use Right Capital unless you work with an advisor that uses it, but I don't have control over that, and I don't even know what the settings are. So that's a big question mark for Right Capital, and it's one of the reasons that I didn't run all of the scenarios through Right Capital, just this first one, just to give you an idea. But we've got 4 very different results from 4 different retirement planners. Now, I thought let's complicate it a little bit. So I thought, let's go back to accounts, and now let's put in some money in a pre-tax. So now we're going to have to deal with a few things that we didn't have to deal with before. One, of course, required minimum distributions. When money comes out of this 401k, going to get taxed as ordinary income, and we'll come back to this in a minute, but there's also the question of withdrawal order. Now that we've got 2 different accounts, a Roth and a traditional, which one do we withdraw from first? So let me save this, and on the expense side, I just picked a number. Remember, I didn't just double it because we got to have taxes have to come out of that 401k, but I put it to $7,000 a month. Now, if we go to the overview here, okay, 73%, so it's come up. Of course, very different assumptions. We can do the same thing in Pralana. So with account balances, we'll add the $1 million to the tax deferred account, and then we'll go over to expenses and make this, it'd be $84,000, I believe. And we'll go to the analysis, Monte Carlo, we'll run this, we'll come back to it. And then for ProjectionLab, again, we'll take the expenses to 7,000, and we'll go to accounts, go to the IRA, $1 million, same fixed rate of return, and we'll go to chance of success, and it's running. Still shows a really high 94.5%. I actually ran it at one point, got 95.5%. These can generate slightly different results when you run them over and over again, because it is a simulation. See, this one's a bit higher. So, but all within the same ballpark. We'll call it 95%, 88%, and reminder for Boldin, 73. So we show very different results. As with the first test we ran, Boldin is at the low end, Pralana is in the middle, ProjectionLab is at the high end. Now, I decided just to try one other thing. I could have tried this in a dozen different ways, but I decided to change the withdrawal order. And in this case, you can see I've got the Roth first. It was originally like this with the pre-tax first. I'm going to make the Roth first. Save this order. If I go back up to the overview, let's see. Didn't change it much. In the previous, it's interesting, in the previous time it did. Let me make sure I've done this. Maybe I didn't save it. Let's try that again. I didn't save it. Now we go back up. Yeah, that's what I got before, 79%. So it went from 73 to 79. That's a significant difference by simply tapping the Roth first. Now we can do that in Pralana. We do that with build, management, and then we can just drag and drop the Roth above the tax deferred. We don't really have any taxable, we do have some. So actually let me make taxable, put it down below. And then run the Monte Carlo analysis, see if it changes it. And then with ProjectionLab, we change the withdrawal order here, and we can just grab qualified Roth withdrawals, move them up, go back to chance of success. Now here, doesn't change it much. Remember, Boldin went from 73 to 79%. ProjectionLab really didn't change at all, 95%. And Pralana didn't change much at all either. So I have to confess, I do a lot with these tools, as you know, and I've reviewed a lot of them on the channel. And one of the things I wanted to do was to start comparing these tools on things like Social Security optimization, Roth conversions. Those are just two examples, but also chance of success. And so I've been working on this for a couple of days. I kind of just expected, they would be close, maybe off plus or minus 3 or 4 or 5%. I didn't expect to see the wide variance that I found here, and I've worked hard to make sure the plans are the same, and I've tested that primarily by looking at the end of plan net worth. I walked through what I did earlier in this video, and they've all come out to about the same place, more or less, at the end of 30 years. There are some differences when you add expenses. In fact, let me just show you that briefly. If we go back to Boldin, and we look at projected net worth. Now remember, we've now got $2 million in investments and $7,000 in expenses, but at the end, we end up with call it 5.8 million. At ProjectionLab, we end up at, 5.3. That's, that's about a 10% difference. That's concerning and something I'm going to investigate further. If we go to Pralana though, 5.7. So again, 5.7 is very consistent with Boldin. It's a little bit lower, but consistent with Boldin. ProjectionLab seems to be off more than I'm comfortable with, but these plans are still, I think, reasonably close. And what's interesting is ProjectionLab, although it has the highest chance of success, has the lowest ending net worth balance. Again, it's not a huge difference, but it is a difference. So what am I going to do about this? Well, as soon as I publish this video, I'm going to send a link to it to Pralana, Boldin, and ProjectionLab, and I'm going to ask them, what do they make of this, and what information can they give us? Can they open the black box, so to speak, of their Monte Carlo simulations so that we can understand why we're getting such, I think, pretty significant differences in the chance of success for each of these programs. And by the way, all of these are really, really simple retirement plans. I didn't deal with taxable accounts, claiming Social Security. I didn't throw in Roth conversions. It's a single individual, not a married couple. So, we could have made this far more complicated. But even with these simple plans, pretty significant differences in the chance of success. So that's so far how I've gotten. That's the output of my tests so far. I will be doing follow-ups on this because I think this is a really, really important question for all of these retirement planners. At a minimum, we want to understand how they work and understand why we're getting those differences so that we can deal with them depending on which software we use. So there you go. If you have any questions, and I can tell you I got a lot of them, but if you have any, leave them in the comments below this video. I'll do my best to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.